Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Indian Prime Minister Narendra Modi shores up ties with China and Russia while attending the SCO summit in Tianjin. That's as leaders contend with the fallout from the U.S. trade war. A U.S. court rules that President Trump's global tariffs are illegal. The levies will remain in place while the administration weighs its next steps. And Israel claims it killed a key Hamas spokesman in Gaza. Meanwhile, the Houthis say their prime minister and several officials were killed in airstrikes last week. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Bersachi back in Dubai. And let's just start off taking a look at the markets. You can see that U.S. futures are trading sideways after a bit of a slip in the session on Friday. Wall Street and tech stocks coming under some pressure. A lot of focus on Dell earnings, some disappointments on AI sales coming through. So that sort of like pulled down the overall index at headline level. But you can see this morning, not a lot going on. Remember, it is Labor Day in the U.S. today. So things are going to be quite subdued. But gearing up for another massive week. We've got PMI data to watch out for, ISM, and then later on Friday, those jobs markets data. The job market is obviously very much in focus, given the revisions that we got the last time around. So all of that is coming up this week. European markets inching towards the green after a pullback last week. A lot of focus there on France and the political developments there with the confidence vote announced on September the 8th. Brent slipping a little bit this morning, down 0.4%. And then take a look at silver. We spent a lot of time talking about gold and the charge up in gold this year, but silver also the outperformer this morning, up 1.9% through $40 an ounce. This is the first time we've broken through that level since 2011. So all that glitters is not just gold, but silver this morning as well. Speaking of oil, one thing I do want to show you, if we flip over, I thought this was an interesting chart because it just tells you how little bullishness there is in the oil market. We've sort of been hovering around the $67 level for the past month. For the month of August, oil is ending on the week. But you can see bullish oil bets have fallen to an 18-year low. So as we head up into Q4, there are concerns that this supply glut is going to hit, especially with the extra production that OPEC has been bringing back to the market. So oil bets have fallen to an 18-year low on the bullish side. Okay, let's push on and check in on how markets in Asia are faring. Yvonne Man is in Hong Kong. Yvonne, speaking of bullishness, very strong reaction out of the gates this morning from Alibaba.
Yeah, that is the strong start here, and certainly what led to the Hang Seng to really buck the trend that you're saying when it comes to this tech sell-off and the like here. Most of Asia is down except for Hong Kong. And Alibaba, you can say, given its weight in this benchmark, is certainly what's lifting the Hang Seng here this morning. Blowout numbers when it came to AI cloud revenue. So that certainly was the spark that triggered the surge, right? That's why we're seeing gains of about 2%. The rest of Asia, though, you mentioned about the tech sell-off here. There's also talk about these chip makers over in SK Hynix as well as Samsung, these Korean chip makers that have been, basically those revoked waivers when it comes to U.S. Trump administration on how they bring U.S. technology to their Chinese operations. So that's why the cost is a bit lower here today. We've also been tracking the protests on the ground in Indonesia as well after some of these lawmaker perks did spark some unrest on the streets there and have turned deadly. So that market opened up there and we're slightly down in Jakarta this morning. You flip the boards and we talked about Alibaba. Certainly that's the one thing. The obsession was about food delivery. Those numbers actually didn't look great either, but it really was the numbers that we saw when it came to AI and cloud that really kind of sparked a lot of interest here. And perhaps that they are now, as one analyst say, the AI enabler in China as well. And so 17% gains for Alibaba. On the flip side, BYD, the leader in the whole EV space, coming up with some pretty sharp declines in the second quarter. So even the market leaders are struggling in the face of this price war. The stock is down some 7%. And as I mentioned, some of these chip makers are seeing some pressure here this morning on the back of those moves from the U.S. Trump administration.
Yvonne, thank you so much. Yvonne Man in Hong Kong. Now, Chinese President Xi Jinping says the Shanghai Cooperation Organization, the SCO, is taking on greater responsibility in driving shared development as global uncertainty continues to rise. Xi made the remarks as he welcomes international leaders to the summit in Tianjin.
Organization, with the participation of 26 countries, cooperation covering more than 50 areas, and a combined economic output of nearly 30 trillion US dollars. Its international influence and appeal are increasing day by day.
Bloomberg's chief North Asia correspondent Stephen Engel is at the event and joins us now. So Xi Jinping, the Chinese president, only just spoke a short while ago. But of course, on Friday, when we were previewing this event, we were talking about the sheer number of world leaders who had flown in to be there for it. Most notably, Narendra Modi, the first time he visits China in 7 years. What were some of the key takeaways, Stephen?
Yeah, so all those leaders are speaking on the big screen behind me right now. You can see the Prime Minister of Pakistan, Sharif, is speaking right now. And that's what's interesting as well, because in the SCO you have not only China and Russia, but you have India and Pakistan, longtime adversaries. But Xi Jinping, in that speech this morning, talked about how all the members of the SCO are partners and friends, and that if there are differences, you have to put them aside for the sake of development and for peace. So again, Xi Jinping is using this opportunity to have all these leaders to China for probably, well, it is the largest, probably the most prominent SCO gathering since it was founded in 2001. The big question, again, which won't be answered necessarily today, but how relevant is it globally? Yes, it's more prominent than ever, but is it that relevant? Well, they would say yes, it is, as a counterweight to the U.S.-led world order, and especially because of the maybe uncertainty among even America's closest allies, like Japan and South Korea and the European Union. So this is a bit of a not a revisionist history coming from the SCO, but an opportunity Xi Jinping sees, especially if they can bring India into the fold a little bit stronger.
Yeah, so have there been any announcements on the deal front? Have any actual economic deals been inked between the various parties? And of course, the market is also keeping a close eye on that bilateral meeting between Modi and Putin later this afternoon, given India continues to remain defiant in the face of Trump pressure and will continue for the foreseeable future, it appears, to buy that Russian oil.
Yeah, absolutely. We are getting indications that energy issues obviously will be discussed. They're going to be discussed between Putin, if they haven't already, Putin and Xi. Again, Putin is probably going to try and convince China again to at least consider a second gas pipeline from Russia into China, the Power of Siberia 2. We all know that India, in defiance of what the United States' position has been, that they're profiteering on the purchase of Russian oil, that India feels that it can still buy on the open market oil and crude from whoever it likes. It feels those tariffs of upwards of 50%, 25% of which is because of the purchases of sanctioned Russian oil. The New Delhi is essentially saying those sanctions are unfair. So again, New Delhi was probably taken aback by that move by Washington. But clearly, Xi Jinping and the Chinese see that as an opportunity to bridge their differences and to find some commonality. Yeah.
Well, remarkable footage there, just as you were speaking, seeing all of those heads of state line up around Xi Jinping. Certainly a notable geopolitical event. Bloomberg's chief North Asia correspondent Stephen Engel in Tianjin. Now, U.S. trading partners are facing increased uncertainty after a federal appeals court ruled that President Trump's global tariffs were issued illegally under an emergency law. Bloomberg's news desk editor Balazs Pence joins us now. Balazs, just talk us through the announcement through on Friday and what bearings this may actually have on the Trump administration's ability to apply those tariffs.
Yeah, Jumana, the key takeaway is that the tariffs for now stand because part of the court's ruling was that they are allowed to remain in place while the case works its way through court. But the court did find that President Trump was wrong to invoke an economic emergency power to put those tariffs in place. So now it goes back to the lower court where the trade court will need to review its earlier decision and the scope of it, whether it applies to all tariffs or whether it applies only to parties in the case. So there are a lot of questions that still remain, including the Trump administration's next move on this one. And should this ruling stand, what happens to all those trade deals that were negotiated in the past few months? What happens to all the tariffs that have been collected since they came into effect? And how companies and countries can plan for trade going forward?
Yeah, and indeed that's a question about many countries around the world who are still trying to engage with the U.S. and perhaps maybe reconsidering thinking about concessions and the concessions that they offer. Bloomberg's news desk editor Balazs Pence, thank you so much for the overview there. Now, still ahead, we'll get the market outlook with Wealthbrix Capital Partners as traders look ahead to key U.S. data due for clues on the Fed's next steps. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Wall Street's rally is set to face a reality check. September's seasonal weakness has investors on edge with key jobs data, I should say, inflation numbers and a Fed rate decision coming up in the next 2 weeks. Now, joining us now is Anita Krishna Gupta, CIO at Wealthbrix Capital Partners. We saw equities take a bit of a breather on Friday, but of course, S&P, NASDAQ once again close to those all-time record highs. Jackson Hole felt like a bit of a game changer for how the Fed are thinking about the market from here. How much do you think these upcoming jobs figures on Friday are going to influence what the Fed does from here?
Good morning, Jumana. I think the job figures are pretty relevant because that's a key data point that the Fed has been watching. Though it is apparent that we're going to have a 25 basis point cut at the next Fed meeting, we've already got that kind of rhetoric from Fed Chair Powell at Jackson Hole, where he did say that the labor market was weakening. So, yes, definitely the job numbers coming out on Friday are very relevant, especially because the earlier ones were revised downwards.
Yeah.
So you've got a kind of an expectation that, somewhere 80, 85,000. Now, anything, which is over above it is a game changer, but not so much. We've got rate cuts coming. I've been saying that rate cuts are coming. Data will help, but I think the path towards a 3% by the end of 2026 is now very much on the cards.
But you need to see a lot more data weakening than what we've had in the U.S. right now. The Q2 GDP figures were revised upwards, actually.
Yes.
Personal spending, personal income coming in line with expectations towards the end of the week last week. In order for us to get to that 3% terminal, would you not have to see a lot more weakening in the actual underlying fundamental data that's coming out of the U.S. right now?
We've got two opposing forces here. One is you've got strong growth, both economic and corporate, very apparent. Part of it driven, of course, by AI productivity. You've also got a strong consumer yet. On the other hand, you've got inflation coming in with tariffs. So you've got all these data points that are going to influence the Fed. However, economic growth was strong in the previous quarter, but we are going to see the effect of tariffs coming in from this quarter. You've already got goods below $800 now also being tariffed. How is the U.S. consumer going to react? How is demand? And a large part of U.S. GDP growth is the consumer.
Yeah.
So it's very important the consumer stays buoyant.
Do you think that equities can keep going? I mean, typically, I was looking at the seasonals. September isn't a great month for equities, either for fixed income. How do you see things transpiring at equity index level in the next month?
So our outlook is that in the next 12 months, you're going to see equities continue to go up. Plenty of factors which are going to support that equity performance. Another 5 to 6% in the next 12 months is for us a clear path forward. But in the near term, equities are going to consolidate. You have had earnings out. You've got the effect of tariffs coming in. What's very positive is the world's largest economy, the U.S., starting to cut rates. However, you've got a lot of other factors, other economies which are growing well, but you are seeing some onshoring of goods, which affects global trade.
Yeah, let me ask you about some of those other economies. Chinese equities have had a massive bullish run the last couple of weeks. Some of that you could say, you could point back to the AI impact. Alibaba, a very good example of that this morning. But there has more broadly been as well a broadening out of this rally, so to speak, in Chinese equities. Do you think that segment of the market has legs?
Absolutely, the Chinese tech market has legs. It's up about 42% this year to date. And also, when we're looking at Chinese tech, also seeing those companies starting to manufacture chips and high-end chips, but they still got time. Also, we also got to keep in mind that, yes, we would be buying Chinese tech, we would be buying Chinese equities, but as a percentage of total allocation, it's still very small. So yes, when I say I'm overweight China tech or I'm overweight Chinese equities, I'm adding to a small percentage, whereas the large part is still the US.
Yeah, I know that you look at geopolitics very closely as well. This meeting that took place over the weekend in Tianjin, SCO, how significant is it, do you think, for the relationship between China and India? The fact that Modi was there the first time in 7 years, the fact that these two economic rivals are now talking about a spirit of cooperation and finding partnership agreements between the two. Do you think that this is going to be a major development in years to come?
Absolutely, because China and India are the two countries with the largest populations globally.
Yeah.
You've also got China, which is number 2 in terms of economic size, and you've got India, which is ranked between 4 and 5. So when two of these countries, which have historically had differences, and they're coming together, and while as India has a kind of a neutral approach, it stays diversified in its geopolitical relationships, but coming together and they're talking about economic strength, they're talking about even getting together on the technology front. So I think it's significant because even in terms of geographical proximity, these Asian countries have never historically really been a bloc in any way economically. Yeah. So yes, it is a potential aligning of interests, and let's see where this goes from here.
Yeah. Anita, always good to talk to you and get your perspectives. Anita Krishna Gupta, CIO at Wealthbrix Capital Partners. Coming up, Israel says it has killed Hamas's spokesman in a Gaza City airstrike. The details on all the latest developments in the region next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Israel says it has killed Abu Obeida, Hamas's iconic spokesman, in a Gaza City airstrike. The group has not commented on the condition or whereabouts of Abu Obeida since Saturday's attack. Israel says similar blows would follow if a sweep of the Palestinian Islamist faction's last stronghold goes ahead as planned. This comes as the Prime Minister of Yemen's Houthi government, Ahmed Ghalib al-Rahwi, was also killed in Israeli strikes on Thursday. The IDF said it precisely struck a Houthi military target in the capital Sana'a after UAVs were launched from Yemen towards Israel. To unpack all of these developments, Dana Khrish, Bloomberg's UAE bureau chief, joins me now. There's a lot to talk about. Maybe let's just start with the killing of the Houthi Prime Minister and several other members of his cabinet. How significant is this, and how likely is it to deter Houthis from the attacks that they've been leveling at assets in the region?
Good morning. Yes, very significant. These are the first high-level political officials that Israel has assassinated from the Houthi group. But it is also very significant because I remember last week when the airstrikes took place on Thursday and were reported by Pan-Arab media, Abdel Malik al-Houthi, the head of the group, the leader of the group, was delivering a live televised speech. So this is also a message to him that they can get him as well to trying to deter those attacks against Israel. But as we've seen from the Houthis over and over again, they keep saying that they won't stop, and the only time they would stop if the war in Gaza stops as well.
Yeah, and Israel continued to go on the offensive with their adversaries in the region, decimating many of these Iranian proxies, Iranian allies around the region. Again, over the weekend, they say that they have also killed the Hamas spokesperson, Abu Obeida. Significant from the perspective of Hamas as well, because there really aren't that many Hamas figureheads left in Gaza anymore.
No, and he is very significant, right? He's an icon. He used to deliver these taped diatribes against Israel. He used to warn Israel all the time using religious rhetoric. It's more, definitely would impact the morale of Hamas supporters and Hamas fighters as well. I think Abu Obeida's killing would also mean that Israel's is escalating its fight in Gaza City, right? This is the plan that they want to seize the city and invade and take over and decimate Hamas.
And intensifying. And of course, we do have the UN General Assembly coming up in a few weeks' time. Many countries around the world moving to recognize Palestinian statehood, but Palestinians themselves have been denied visa entries into the U.S.
Right. The likes of Mahmoud Abbas and other officials, the Palestinian president, has been denied these visas to the UN. Now, this is quite unusual and breaks with precedent that the U.S. has always delivered these or issued visas for all of its adversaries, even Iranian officials, those who couldn't get visas on a usual day. Now, this won't, I would say, wouldn't derail the effort by France and backed heavily by Saudi Crown Prince Mohammed bin Salman's effort to recognize a Palestinian state and host the two-state solution summit, but it would definitely undermine it for sure.
Dana, thank you so much. Dana Krish, Bloomberg's UAE bureau chief. Now, the Washington Post is reporting the Trump administration and international partners are discussing proposals to build a so-called Riviera of the Middle East on the rubble of Gaza. The 38-page prospectus seen by the publication envisions at least a temporary relocation of all of Gaza's more than 2 million population. That will be through what it described as voluntary departures to another country or into restricted, secured zones inside the enclave. The plan will also reportedly offer every Palestinian who chooses to leave $5,000 cash payments and subsidies to cover 4 years of rent elsewhere, as well as a year of food. Let's take a look at how markets are shaping up this early morning. First trading day of the week, equity futures trading sideways. S&P not doing a whole lot. NASDAQ the same, but we did get a pullback on Friday. Some weakness coming through on back of Dell and their guidance vis-a-vis AI sales. So perhaps a little bit of nervousness creeping in. Remember, today's a holiday in the U.S., a public holiday, so it'll be thin trading. But European markets are open. European futures look like they're going to open up in the green, up 0.1%. Over there, the market pulled back quite a lot last week. The Euro stocks ended the week down 2.6%. A lot of focus on France, political developments there with that confidence vote scheduled to be held on September the 8th, and the current incumbent prime minister likely to lose that vote. So some political developments to keep an eye out for. Now, coming up, South African rand and stocks just delivered their strongest August in nearly 2 decades, putting the country firmly back on investors' radar. We'll unpack the drivers next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Indian Prime Minister Narendra Modi shores up ties with China and Russia while attending the SCO summit in Tianjin. That's as leaders contend with the fallout from the U.S. trade war. A U.S. court rules that President Trump's global tariffs are illegal. The levies will remain in place while the administration weighs its next steps. Plus, a copper boom drives a world-beating rally for the Zambian stock index, while South African assets see their best August in 2 decades. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Well, Labor Day today, so U.S. markets closed for a public holiday, but we had a small pullback in Wall Street on Friday with some concerns around the AI outlook, with Dell really the driver there, and one of the reasons why chip makers, at least in the U.S. on Friday, came back a little bit. But looking ahead this week, we've got major drivers coming up. We've got, of course, the jobs market, NFP number to watch out for on Friday. And then the week after, we have that September Fed decision. So many different drivers coming up. And the next few weeks, people are saying, going to be key for market direction. This is the look ahead today. S&P futures not doing a whole lot, down about 8 basis points. European markets inching towards the green, up 7 basis points after a pullback last week. French concerns around the confidence votes are swirling. So that's keeping a lid on how far we can go with these European assets. Brent also dipping a little bit this morning, down 0.4% as we head into that OPEC meeting, the virtual meeting that's coming up in a week's time to discuss perhaps potential extra supply to the market. And then silver, take a look. We have broken through $40 an ounce for the first time since 2011. So it's not just gold that's been doing really well this year, but also silver has started to enjoy the rally too, up 1.8%. And flipping over our terminal chart today, just to point out, As we speak about some of the drivers for oil for the month in August, it ended in the red. But looking ahead to the fourth quarter, people are concerned about the mismatch between supply and demand. The anticipation is that we're going to get to a supply glut. So take a look at positioning. Bullish oil bets have fallen to an 18-year low. Hedge funds have cut their net longs on U.S. crude as the glut looms. So there is concern that in the coming months, we may start to see more downward pressure on the price of oil. Okay, let's check in on how markets in Asia are faring. Yvonne Mann is in Hong Kong. Yvonne.
Yeah, Jumana, as you mentioned before, I mean, the next 14 sessions are going to be quite critical for the stock market rally because you mentioned about inflation numbers, jobs number out of the U.S., plus the Fed all happening in the next 2 weeks or so. It's quite pivotal. Certainly, right, we're kicking off the new trading month, slightly to the downside when it comes to Asian stocks, but Hong Kong seems to be the big standout here, right? We're still up about close to 2% there. It is Alibaba, that story that continues to lift the entire market here this morning after what we saw, the biggest move in 2-3 years for the stock on the back of those earnings, right? It wasn't so much about the food delivery side of things, which, didn't look as bad as expected, but it really was what we saw in terms of AI cloud revenue that really sent this stock shooting higher as well. So that's why you're seeing Hang Seng up, Kospi as well as the Nikkei, watching very closely these chip makers, given some of the moves that we heard from President Trump there. And JCI Indonesia, we are seeing Jakarta under pressure here today, given the protests that we're seeing on the ground. So you flip the boards and you take a look in terms of what's really driving it. You talk about Alibaba, that certainly is still the key standout there because it seems like it really reinvigorated this whole AI trade once again. Meituan today also announcing a new language model as well. So that's really the big theme. BYD, pretty weak earnings for the second quarter net income. And the fact that they are the market leader in the EV space and still struggling in this price war just goes to show investors are not liking that news. We're down some 7%. And the Trump administration, right? So chip curbs hurting these Korean chip makers like Samsung, like SK Hynix there. So basically they revoked these waivers basically for these companies to ship or use U.S. manufactured equipment in their China operations. So once again, we're seeing quite a bit of pressure on the likes of SK Hynix here today.
Yep, those export restrictions are showing up in various places today in some of those South Korean chip makers. Yvonne Mann in Hong Kong, thank you so much. Now, most of China's closest international allies are gathering in Tianjin for the SCO summit. President Donald Trump's tariff war has accelerated Beijing's investment push into developing nations known as the Global South. Beijing is also recalibrating ties with New Delhi. Leaders Modi and Xi Jinping held bilateral meetings on Sunday, with both sides pledging to be partners and not rivals. Joining me now is Swasti Rao, professor at OP Jindal Global University. Really good to have you with us. It really feels like this was a pivotal moment geopolitically, the meeting of these two big leaders, very big characters from the region. President Xi Jinping alongside Prime Minister Modi, his first visit to China in 7 years. And of course, later in the day, people are watching out for that bilateral between Modi and Putin. Let me start off by asking you whether you think it actually is plausible for India and China to move towards a partnership away from a rivalry.
Well, a very good morning to you, Jumana. And let me just start by saying that one needs to sort of really get this insight correct because, if you were to just take out all context and look at this as a reset, I think we are going to get all our conclusions wrong. What we are seeing happening in China, the last couple of days is a tactical management from India's side. It is about signaling and not substance. Please remember, China remains to be our biggest challenge. Okay, China claims about 90,000 square kilometer of our territory in the eastern sector. It claims 38,000 square meter of our territory in the western sector and illegally occupies more than 5,000 square kilometer of our territory today. However, having said that, recently India's experiences after Operation Sindoor have shown us that China is willing to go all the length to support Pakistan strategically, diplomatically, and militarily. and here let me underscore the word militarily, which has been detrimental to India's interest and could be detrimental to India's interest in the future. And right now, with our relationship with Donald Trump, literally being thrown under the bus by Mr. Navarro's repeated tone-deaf statements on India's purchases of Russian oil. And everybody knows here in India, it is not about Russian oil. The problem is an ego clash between Prime Minister Trump and, President Trump and Prime Minister Modi. So coming back with a very important strategic partnership thrown under the bus and all the trade talks with the U.S. now uncertain, we simply have to really tactically manage our neighborhood, and China being the dominant power comes first.
Let me pick you up on a couple of things that you said there, specifically the relationship between India and the U.S. And, of course, Peter Navarro's comments got a lot of attention last week. But specifically when it comes to President Trump and Prime Minister Modi, what hope is there at this point of fixing the relationship and the damage that has been leveled over the last couple of weeks? Do you see things turning around in the near future?
Jomana, like I mentioned, and I'm going to stay by that, the thing is that this is all tactical. Please see, is there anything which is substantive? What we have done, we have only resumed our direct flights, which we suspended after the Galwan attack. We have now, China has told us that they are going to ease different kind of export controls on things like urea and stuff. Today, India remains, the trade we have is $125 billion, and the trade deficit we have is more than $100 billion. Okay. Second, in the last 25 years, in your primer, you were mentioning that China has been diversifying its investments into the countries of the global south. In the last 25 years, between 2000 and 2025, the total investments from China into India is about $2.5 billion only. So please, one needs to understand that the problems we have with China are structural, okay, and they are not going anywhere. But the need of the hour is that India tries to keep it on the side and tries to take a step forward in managing a complex relationship, because the last thing we want is another instability in the neighborhood. And that is where it is. It is a small step forward. And just another thing, all these developments are not only coming in the last 2 days. Please, let's also set the record straight there. The normalization, or the tactical normalization, so to say, started in October 2024, and there has been progress made ever since in incremental steps and incremental developments. So what we see happening yesterday and today is also a part of that. Let us not confuse or kid ourselves or anybody else, because I see a lot of, wrongly pitched commentaries coming all over the world, which is that this is a strategic paradigm shift and a reset.
So
it is not.
Point taken. Okay, so point taken on that. Let me just ask you maybe a bigger picture question, which is, historically, China has sort of been the global anchor for the BRICS. And India, in the past, perhaps has enjoyed close relationship with the U.S., perhaps closer ties to the Quads. How does this relationship change, if at all? Because you seem to think that what's happening now between China and India is purely a tactical arrangement. Could there be more long-term strategic implications as well?
Yes, Jomana, I have to really, here also mention that if Donald Trump, we in India understand that Donald Trump is an aberration. In a very carefully crafted and put together strategic partnership for the last 25 years. So Donald Trump here is the aberration. Donald Trump will go, or Donald Trump's attitude towards India will change if at all he's able to put an end to the war in Ukraine. That seems to suddenly have become the centerpiece. Now, if Donald Trump's attitude does not change, and if America continues doing what it is doing, it is a possibility that India will then have to look for other, trading partners. Now, having said that, please remember that when it comes to SCO is not a trading bloc. SCO is primarily a counter-terrorism kind of a structure. You have a permanent structure called the RATS, the Regional Anti-Terrorist Structure. And our bigger problem, the biggest problem there, is that Pakistan is a member of the SCO. And recently, all the kerfuffle that you saw in India after what happened in Pahalgam actually was coming from Pakistan. So long and short is that there are serious restrictions and limitations on what India can expect from the SCO. now it makes sense for us to be in these groupings because we also want to, we don't want the countries of the global south to completely fall into China's lap. And very quickly coming and connecting it to BRICS.
Yeah.
Now, BRICS certainly is something which is more useful for us because of the fact that BRICS has something called a New Development Bank, which is a loaning agency. And that makes BRICS an attractive proposition for many countries of the middle order. And that is the reason so many countries are joining it. And that loaning mechanism actually works rather well. That's one. The second thing is that all this drive that you see towards de-dollarization, from India's perspective, it's a very nuanced thing. I see, again, very wrongly, interpreted statements where one says that India is pushing for de-dollarization. And the thing is that there is a nuance. The nuance is that if India is not in these groupings, what India basically does is that India sort of lets the space for de-dollarized trade to be, to be expressed in yuanization, which is not in India's interest. So long and short is that this is about India's participation in groupings that are non-Western. It doesn't mean to say that India shares an anti-Western, preference for the world order, because India's huge partnerships are with the West.
Opportunity. Swasti, we're going to have to round it up there. Thank you so much for coming on our show today. Really interesting and very useful insight for our viewers. Swasti Rao, professor at OP Jindal Global University. Thank you so much. Now, the South African rand and equity market has defied seasonal trends to post their strongest August in nearly 20 years. The rally so far has been driven by a weaker greenback and stronger commodity prices. For more, we're joined by Bloomberg's Robert Brand. Robert, just walk us through the price action in the South African Stock Exchange. What has lured investors back in again?
Well, a couple of things. I mean, on the stock side, good morning, Joanna. On the stock side, mostly strong commodity prices. South Africa has got quite a strong mining sector, and we know what's happened to gold prices and platinum prices over the past year or so. So that's been a strong underpinning to the stock market gains. The stock market has reached multiple record highs this year, mostly led by gold miners and platinum miners. That said, we also see some supportive economic fundamental underpinnings in South Africa that is supporting stocks, and especially the rand. We've got a coalition government that's been pretty stable now for over a year, and seems to be serious about implementing economic reforms. And we've got a central bank that is very serious about keeping inflation down. So the fundamental underpinning is there, but mostly it's about flows from outside the country into the mining sector in South Africa.
Yeah, and Zambia also, I've noticed, has surged to the top of the global charts. What's driving the rally there, and is it also somehow commodities related?
Again, it's a commodities-related play. Copper mining, Zambia is one of the world's biggest copper producers, and copper price is also very high. So you'll see that the copper miners in that country have been leading that rally. And also in Zambia, they've been going through a very long and difficult debt restructuring exercise that seems to be nearing an end now. So there's another thing that may be reassuring investors to move into that economy.
Bloomberg's Robert Brand, thank you so much for walking us through the latest and some of these key stock market performances in the African continent throughout the month of August, a strong commodity-led rally. Now, coming up, Namibia is betting big on oil. A wildcatter's latest drilling campaign could be the key test of whether Africa's newest hotspot can turn discoveries into real production. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Persechi in Dubai. Abu Dhabi's state energy company has completed a share sale of $307 million, offering approximately 222 million shares in ADNOC Logistics and Services. I spoke with the CFO, Nicholas Gleeson, about the transaction and a potential MSCI inclusion.
MSCI inclusion is really important for us, and in particular for our international shareholders. We've had a number of shareholders over the past year who've been signaling that they'd like to take a larger position in our stock because they understand our growth story and the tremendous opportunity set we have ahead of us. But their ability to participate in the stock is limited by daily liquidity in the shares. So MSCI inclusion will usually see a significant boost in liquidity, and it will improve the number of international investor mandates that we sit on to participate in the stock.
Are there any particular investors or a specific investor base that you're looking to target with a potential MSCI inclusion?
Yeah, so I can't give any names, obviously, but there's a large number of, for example, long-only funds that you see in the US and in Western Europe that have demonstrated a strong appetite to participate. So, you know, after meeting with them over the past year, we've certainly had them in mind when the book build was done.
Yeah, well, I'm sure you had many conversations in the run-up to this share sale and probably got a good feel for the market. Would you expect to see more of these types of share sales throughout the course of this year? Not necessarily from ADNOC L&S, but do you sense that things are about to pick up in the region in terms of activity as we head into Q4?
I definitely think that's the case. So what I see when I meet with investors internationally is that most regard themselves as underweight the Gulf in their current positions. They're looking for the right stocks to invest in. Liquidity is really important to accessing the stocks here, and we're seeing boosted liquidity. The ADX has done a great job in making its stocks known internationally and in boosting that liquidity of stock turnover. So I do think we'll see more and more activity here on the ADX and more broadly in the region.
Yeah, well, we weren't able to speak around your earnings, but the earnings did come in quite strong, above market expectations. EBITDA at $744 million. You upgraded your full year guidance. You increased your dividend by 5%. So things seem to be going well. What's next for the company?
Yeah, so things are going really well. I think really important in our first half results this year is we delivered $604 million of operating free cash flow, again ahead of expectations. So what we're showing the market now is we have the ability to fund all of the value accretive growth that we've promised to the market and much more. Our guidance is based on what we've already committed to the market and what we've already communicated, but we've got about $3 billion of capacity to deliver highly value accretive investments beyond what's included in our guidance to the market. So there's a lot of upside room for the company. That free cash also positions us to relook at how we reward shareholders for participation in the stock. You know, so I think we'll see more discussion over time around how we look at dividend policy in relation to that very strong free cash generation by the company.
ADNOC Logistics and Services CFO Nicholas Gleeson speaking to me on Friday at the day of their share sale, massively oversubscribed. Now, Namibia is drawing global attention after a string of oil discoveries raised hopes it could become Africa's next energy hotspot. Wildcatter Rhino Resources, which struck oil earlier this year, is now drilling another well called Volans, with results expected next month. So for more, we're joined by Bloomberg's Paul Burkhardt. Paul, maybe let's just start off with some contextualizing here. How much oil does Namibia have to begin with, or how much is it expected to have?
Good morning. So Namibia is in an exploration phase. It's shaping up to be a really exciting basin for Africa, but it's still, the companies are still drilling to see what they have there. So the government has been using an estimate of 11 billion barrels of oil. In 2022, Total and Shell made very big discoveries, and that was followed by a string of other discoveries, but then the geology is turned out to be quite complex in some of those wells, and so Shell took a write-off of $400 million on exploration charges, and now everyone's kind of watching each new well that comes up. So Rhino had a discovery earlier this year, and now they're drilling again as we speak.
Okay, so you talk about Rhino Resources. They're a private company. Who are they exactly, and how influential are they going to play in Namibia's ultimate search for oil?
Yeah, it's very interesting because they're kind of standing shoulder to shoulder right now with Shell, Total, Galp, a lot of the other oil majors that have come into Namibia's offshore, and they did have this acreage. They have had this block, before some of these discoveries. So they saw something there. They do have backing. They do have partners in Azul Energy, which is BP and Eni. But as an independent, it's kind of not something that you see a lot, especially in the company of the other oil majors. So this next well for them is highly anticipated, and kind of see what happens from there.
Okay, Paul, thank you so much. Really good to have you on talking us through the potential in Namibia. Bloomberg's Paul Burkhardt. Now, the European Union's Commission President Ursula von der Leyen says the bloc's new plan to accelerate investment in the bloc's defense industry will benefit Poland the most. The Commission will prepare a roadmap for how to invest the additional defense funds in coming weeks, and will discuss it with national governments in October. Joining me now is Suzanne Lynch, Bloomberg's Brussels bureau chief. Suzanne, so much going on in Europe these days. Maybe let's just start with von der Leyen's trip to Poland and other European countries. What were some of the main takeaways?
Yes, this was a real show of strength by the European Commission President. Things are really reopening here September the 1st in Brussels, and I think this was about her setting a new tone and showing these EU countries that are closest to the conflict in Ukraine that Europe stands behind them. So this defence programme she was talking about, this was 150 billion euro worth of loans known as a SAFE programme. And under this programme, EU countries can apply for this money at very good rates and they can use that to bolster their own defence industry. Now, as she said there, Poland will be one of the main recipients of this. Poland, a very big country bordering Ukraine and also Belarus as well. But even per capita, Poland has been spending a lot on defence. It's reaching that 5% of GDP that proves so elusive for so many countries, but is now enshrined in the new NATO target. So Poland spending a lot on defence, and it hopes to really participate in this programme.
But perhaps some cautiousness coming through. The German Chancellor Merz over the weekend warning that the Ukraine war may go on for a long time.
Yes, look, I mean, this is a big concern now about what happens next when it comes to the Ukraine war. Obviously, it's a couple of weeks since the Alaska summit between Donald Trump and Vladimir Putin. And then we saw those European leaders travel to Washington to meet Donald Trump, along with President Zelensky, to try and move forward on this. But so far, very little in terms of specifics. That fabled meeting, if you like, between Vladimir Putin and Volodymyr Zelensky has yet to happen. We are expecting perhaps some movement this week with some of the European countries talking or maybe committing in the first instance to sending some troops as part of some kind of peacekeeping mission. Although, interestingly, Poland, despite its spending on defence, is not prepared to send troops. So this is an issue for European countries. Do they want to get involved in terms of boots on the ground in Ukraine, which obviously is just bordering a lot of these countries, and whether there is any light at the end of the tunnel for this war?
Yeah. Suzanne, really good to have you with us on our show. Suzanne Lynch, our Brussels bureau chief. And just on a housekeeping note, she will be taking the lead as our Brussels newsletter gets a fresh look. So make sure you sign up for that. It's at bloomberg.com/newsletter. So Suzanne, who you just heard from, will be editing and writing that newsletter. All right, a quick look at active futures. Not a lot going on in terms of the U.S. It's Labor Day today, but European markets leaning towards the green. That is it for Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Stay with us and me for Daybreak Europe. This is Bloomberg.